Where does my money live? And there's a keep growing even when I'm using it. That I think is the differentiator between, because a lot of people, what they'll do is they'll say, all right, which investment has the highest rate of return or the highest ROI, and I'm going to go there.
Who should be paying attention to this? I think I asked this in the beginning. Is this for everyone? Is there a specific person in your avatar or client that you feel is really resonating with this message the most from the folks that you've worked with?
Yeah, definitely. So the good thing about this is there's no really minimum, like you need $100,000 a year to do this. It could be for anybody. I started my first policy with $300 a month. I worked with clients who started the same thing for $300 a month, younger clients. And then I've also worked with clients who've invested $500,000 through a single premium whole life option, where it's just a one-time single premium case of $500,000, So I could pretty much build out a solution for anybody, whether they're, still in college, they want to save some money, or they've been investing in real estate for the last 30 years, There's solutions for both. And I think that what we always do with our clients is we do like a full, thorough 60 to 90 minute financial analysis. And it's pretty much us just asking questions, seeing where they're currently at, seeing where they're financially at, their objectives, needs, wants, long-term goals, short-term goals. I think we built out the policy based on that. And I don't think there's really no requirement that you need to meet, but there is a quality that people must have in order for them to, I think, agree with this and follow along with it, is that it has to be a long-term strategy, number one. And number two, it's a mindset shift. Instead of going from the retail investor, retail consumer, you're going to thinking like a bank, where do I park? Where does my money live? And there's a keep growing even when I'm using it. That I think is the differentiator between, because a lot of people, what they'll do is they'll say, all right, which investment has the highest rate of return or the highest ROI, and I'm going to go there. It's almost like they're shopping for investments. And this strategy is not like that. If it was like that, I'd probably be out of business, because there's so many different variables involved. It's more of a mindset shift. It's something that's long-term. If somebody puts in, for example, year one, they put in 10,000, they only have 6,000 in cash value, they're going to think that's a terrible investment. But it's not about the first year. It's about the next 20 years. And it's also about creating a hedge against what's going to happen in the future. Because if you remember in 2008, a lot of real estate investors, what they were doing is they had, all their equity tied up in properties. And then when they want to buy new properties or take out cash, they would just borrow against it. And it was fun. You just keep borrowing against it. You have all these properties, and then you can keep doing that. The banks would give you the financing because they have the collateral. But then when the market crashed, the market values crashed. So that means that, and then banks also lost a lot of money. Banks closed down, banks were removed, went out of business. So what happened was that there was a liquidity crisis where banks weren't even around to give out lending. And then even if there were banks around to give out lending, then they would give you a loan to value at market value, not at what you paid, but at loan value, at market value. So if the market value diminished, then your ability to borrow is going to diminish. Again, creating more and more, it's like a cycle of liquidity issues. Now, when you have this whole life policy, this whole life solution in place, even if there is another recession or depression, the cash value in the policy and the ability to borrow will not be hindered by those external factors. Meaning your market value doesn't dip because the S&P 500 dips or because the real estate market dips. You have something that doesn't connect or correlate with the stock market or the real estate market or any market for that matter.
Experiment Nation, thanks for watching. If you found this experiment to be useful and practical, one that you can apply in your lab, and would like to receive more experiments and blueprints, make sure you text me at 678-679-5613. Text experiment at 678-679-5613 to receive more blueprints and experiments for your lab. We'll see you on the other side.